Michelle Songy, so happy to have you on Paper Napkin Wisdom. Thank you for joining me today.
Thank you. So happy to be here.
So, Michelle, you shared with me, and I said this in the green room before we started, I think a really cool paper napkin. And I think it's an important subject. So, I'll read it. Prepare to scale down at some point. It isn't a bad thing. That comes from experience. Why did you share that with me?
Um, this is a second company I'm on, and it always happens. It's happened at both companies where we've been in a position where you're growing, maybe a little too fast at first. You start a company, you get excited, you raise some money, and everyone's pushing you to grow. And you kind of are. I felt like my success was based on people asking me like how many employees you have, and you answering that question and me increasing it. It's like, oh, we have 10 employees. That's great. Now we have 20. Now we have 50. And that felt like success for me. So at times where we've had to scale down, been told like, we have to reduce expenses or like the market's changed or any number of reasons why like you need to extend your cash runway. You have to, you are forced, and most companies have and will scale down at some point. But it is a very scary, very emotionally, physically draining situation to go through, especially early days when you have a lot of employees you've hired that you know really well and are, friends with, almost family with.
Yeah. So in your case, the KPI that you were thinking about was indicative of growth was people, right? Like the
Yes.
number of people on the payroll.
Yes.
Do you find that idea of scaling back also applies to customers or revenue or other metrics as well, or is it just about people?
My perception now has changed, and I think also in the last couple of years, a lot of startups, we've all had to learn how to be a lot more efficient and to manage and get through downturns and COVID in different eras. So I think now I now view it differently. I don't think of employees as success. I do, yeah. I think of revenue. I think of customers. I think of gross profit margins. I think of a lot of different numbers that really revenue is probably more what I'm targeting, and that's what I see as success.
Yeah. Well, I guess maybe I misphrased my question. I wasn't just talking about what you think about as success, but do you think that sometimes it's important to scale back those other things, like how fast you're growing, like how much revenue you're growing by, and how many customers you're adding, and all of these other things that are, maybe more valuable metrics of success, but also things that need to be scaled back that most people don't talk about, right? Like sometimes you got to manage your growth.
Absolutely, yeah. So sometimes you have a certain amount of customers, but they're not all the right customers for you. You might need to change like what we were a lot of times small into really small businesses. We realized we needed to go a bit more upmarket. So sometimes your initial customers aren't your final customers, or your target market changes. And yeah, sometimes you do have to scale back the revenue to like readjust, especially if you're taking the team back, and then kind of get the foundation reset so you can then grow and scale again.
Yeah, so I mean, and your story is a little bit different, right? You started a tech company and you scaled it, right? And you exited to Amex, right? I mean,
Yes.
that Amex doesn't buy a lot of companies, so that's interesting. How did that happen?
We were in the mobile payment space. We were actually a really small player at the time. And we done a round of like crowdfunding back in the day too. And then had some like angel investors, seed. And we were growing. I think we grew the business pretty strong, and we were really talking to strategics and looking to see, who would be a client or partner with us. So a lot of companies kind of saw us as like a feature add-on, like a good fit for them. But we were like probably the absolute smallest startup in the space. We had some big, obviously, players in mobile payments
And
next
this
to
was
us.
Cake Technologies, right?
Yes, this was Kate. And I was living in London, so living abroad, starting a company on my own. And yeah, I think the time we had to scale down there as we were raising money, we were looking at talking. I had these acquisition talks, and we had to scale down in order to like extend and fuel our runway. Um, that was a hard one just because like you feel like you're excited and like there's big things coming. And it always also feels like the discussions always happen like in advance of like the holidays. And you're just like, no, why? Like we don't want to scale. back at the holidays. Like, this is the worst time to be having these discussions, when everyone's happy and you're going to parties and you're just sitting there thinking about like, oh man, I have to like let some people go, and you don't want to do it, and your stomach is just in knots about it.
Mhm.
Um, but that time we really needed, it was more of, yeah, there was a time and a place, and we knew we only had so much cash to run. My biggest scaling down I did, the hardest one though, was 2 years ago in the summer of 22, after we had raised money. We had grown up to, you know, 10 to 20 to 30, 40 something employees. We had to scale down to 10.
Wow.
Yeah, that was the biggest, hardest one I've ever done. And that was tough. It was, I didn't think it was possible. I thought, we're gonna do this and we might just call it quits at this point. Like, how there's just no way we can run with a fourth of the amount of employees we had before.
Yeah.
But investment times were tough. We knew that. There was a downturn in the markets. People were pulling their budgets, expenses, or their marketing, were a marketing expense. There was a lot of businesses that were starting, in COVID and didn't make it. So there was just a lot of things we knew we needed to brace. And that was by far the hardest thing I've ever done.
I can imagine. I don't want to skip over initially this first one, right? With cake, where you're talking
Mhm.
about scaling back at the holidays and happens at the holidays. And I have this story that I speak with my wife, that bad news happens on Friday afternoons. Bad news comes just the week before Christmas or the week before a holiday. And and I wonder about that. Like, is the news always there and we just recognize it in the contrast? What do you feel about it looking backwards? Was the writing on the wall and you just started to reach the wall at the holidays? Is that what happened, or did it really just happen at the holiday?
In talking to my old co-founder, we talk about it too. It feels like it happens around the holidays. I don't know. I think we just thought that was chance.
Mhm.
Um, Maybe there's something about looking to the year ahead, where
Yeah.
things are going, taking a step back, learning. It could be. I've never thought about it, honestly. It's like timing. I just always thought it was a coincidence that around the holidays we're having to have these hard discussions that we don't want to have. But we know you only have so much time left as a startup. Like, you're looking at your runway, you're running against that goalpost. And if that starts inching near, you have to, go ahead and make those decisions sooner than later. And you don't have time. You don't have time to wait. You
So
have to pay
so
the dollar.
let's go back to the first time that you experienced this, the scale back, right? Where you have to let people go and you have to sort of come to terms with that. How did you get past the initial, oh my gosh, we got to do this, to taking action? What did you do?
I think sometimes, as you're growing, that like, first of all, when you're starting a startup, you might need, let's say, example, a lot of account managers, because you haven't built the tech needed to automate a lot of things needed in your business. So there is a lot of roles at the beginning of a company, a startup, that you need, that, as you grow, you start to realize like, shoot, we're growing. I don't think not. I kind of used to have I started having a feeling like I'm not sure if we have the right people in the right seats.
Mhm.
We're moving people around, but we now need someone that's really specialized in this, and we don't have that. So you start to feel some of that, just like the experience and the change in the business that's happening. And then you start seeing like, okay, and, then you start looking at your margins and growth, and like, your forecasts just keep changing. So I think you have a feeling about it, and then it comes to times where, you have to look at, we could structure things differently. But if we do that, that's a huge change, and and then you have to start making decisions of who's going to leave. And I think that's what was most soul crushing to me, because there's people that started this with us and believed in us and are loyal, great people, as I said, like friends. and and just the thought of that is hard, and it took me days, if not weeks, to be able to actually, like, when we made the decision to finally just, we knew we needed to just rip the band-aid. um
Yeah. I think it's really interesting, and it's interesting that you're sort of like coming back to this idea of looking forward, planning forward helps you sort of look at where you were. Maybe that happens around the holidays, and then you went to right people in the right seats. So it really does feel like maybe the strategic alignment was letting go to move forward. Like you have to do that. Is is that also kind of what you're referring to from your experience, right? And saying it isn't a bad thing. Sometimes, scaling back is letting go so that you can move forward. They can move forward because nobody comes to work to suck at what they do, right? Like nobody wants to feel bad for 8 hours a day or 10 hours a day or whatever. They're just that's not why they're there. So being kind and caring about it doesn't mean that you don't have to be ruthless about letting people go, right? I think that's also what you're saying.
Yeah, exactly. And yeah, I think that sometimes like they can feel some of the pressure too, because they feel like they're, they want to live up to this role, but maybe that's not the right fit for them. But it's like trying to, what is it called? Like put a square peg in a box, a circle in a box, or a square in a
Yeah.
circle.
Square peg in a
It
round
just,
hole sort of thing.
yeah, there we go. And you're pushing people and you want things to work, but I think you're right in that many times we have taken a step back, and knowing like, hey, we're gonna make a big change and this is gonna cause like maybe a good amount of cancellations with customers. Like that's really tough to think about. Or yeah, when you're changing, it's like customers, there's gonna be a revenue change too. There's gonna be some downward effects. You can't just cut half a team and see. I mean, I wish if someone can do that, please teach me how. You can't just cut a team and see no repercussion from it. So, and even the rest of the team is worried. You have to think like what they're thinking. Like, am I next? And how are we gonna give people this momentum that we're okay and to keep working and to keep growing with us, without their peers.
Yeah.
Um,
So how
and are
did you
they
do
gonna
that?
have to do triple the work?
Yeah.
Like I've been there before on the other side, corporate side, when teams are getting slashed and you're like, hey, like, so I'm just doing two jobs now, thanks, and I'm not getting paid anymore.
Yeah. Well, that's the other rough part. How did you handle that? Both at Cake and
Yeah.
afterward. How did you do?
I think it's really rallying the team together during that and knowing that it is, an emotional time and sometimes things slip and people hear things before and that that whole day that they're probably scared and not and that their own work and productivity is going to go down because like people you're scared, your peer, someone you talk to every day is all of a sudden not going to be working with you anymore. But I think we really would go speak to those teams ahead. We try to speak to them ahead of the word getting out
Yeah.
and say, listen, like you're here, you're chosen, you're here for a reason. The company is now needing to go in a different direction, or it's like, we've seen some challenge, or we want to, really see the growth of this company. And you've, really tell them like why they're here, why we chose them, and that they will have like a bigger part to play. So I think, yeah, like having those discussions before, during, and after the process a lot's important and just keeping up the momentum having
Yeah.
to.
How big a role does, developing not just the relationship, but the skills of the people that remain play into that? Like, is that something that you're intentional about during that phase as well?
Yes, especially, I mean, you before really, I think we put together like a new org structure, roles, responsibilities, and we fill in all those roles, before we even tell them that this is what we're thinking is going to be your new role. Of course, we need to have them on board and feel good and confident, not just say, yes, 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 I'll do it, but really, I'd be really overloaded or burned out. We have to think through a lot of these things as we go. But I think that kind of morphs too. I think probably the initial idea and structure probably changes some as we put different people. And the hardest thing is just we say like balls dropping. Like we didn't think of everything. And it's impossible to think through and knowing what every single person is always doing in the company at all times. So there's definitely always, like we say, we try not to, but like there's definitely like balls dropped in the process, and you have to also manage those fires
Yeah.
um, happening and throughout the
Yeah.
process.
So so let's talk about the time back in, the biggest one, the most dramatic one that you talked about, and you sort of going backwards a little bit, the summer 2022. Tell us what was happening then. Like what was the story? You were at about 40 people,
Yep.
and what's going on?
We
Now you're
had
2 years past the
raised,
pandemic.
yep, we had raised money only, 6 months prior. We did our pre-seed round. We did 1.5 million. We were growing. That was the thing. That was the hard part is we were growing. Um, and it was exciting times. We followed the momentum. Every month we were growing more and more customers each month. But we were also just all of a sudden our employees, like, it seemed to like doubled overnight. Like, I feel like all of a sudden I knew all my core employees and there was people joining and I never met. I was like, who's that? So it did start to feel like a little bit out of control. Like, okay, there's a lot of people were joining, but the way we had the structure set up in the first place, meant we had to hire XYZ people for every so many customers we needed, or we needed, to add more in the tech team or account management, or we needed more sales because we had more, meetings being booked. So how we were set up, it was just like we thought we needed, more and more employees. And then we started looking at our cash runway and noticed that was getting cut in half as well. And then we started to see, I think it was like early, it was, yeah, in that 2022, then we started to see kind of that spring, like a bit of a pullback from the market. Things like, like sales campaigns weren't generating as many responses as they were before. Demos weren't being closed at the same rates. And some of it definitely was the economy, pushing back on us, and the market that we were playing in was pulling back. And we noticed that, but I think also, yeah, we're looking at redoing like our forecasts constantly, because they were changing so fast, and realized that we only had so much runway and we couldn't depend. And I said, and everyone said, just go raise more money, just go raise more money. And I was like, yeah, but what if we can't? What if we don't? Then we're out, then we have no business. And we only had so much time to make that decision and make that call.
Yeah.
So it was pretty quick. We had to decide to scale back just so we would know that we could like continue on.
Yeah, and it's one of those things also when you're in revenue, right? It's one thing if you're in development and pre-revenue company, but if you're in revenue, it's sometimes harder to go to the market for capital than it is to find more customers when you're at the right size, when you're in the right sweet spot, right? Like, so if you're, it, it, it's kind of counterintuitive. Sometimes people say, oh, here's a magic wand, go out and raise another whatever. But that's harder than finding customers and going wider and deeper with your current clients.
Yep.
Is
And we
that,
were in a funky period. It's like there is a lot of people are interested in that 0 to 1 million phase. Like, we were past 1 million ARR. And then there's a lot of people are interested at 3 million and up. So we were kind of in this like middle zone and trying to figure out, okay, how do we get to 3 million?
yeah,
And it does take, looking back, it's a completely different team, it's a completely different structure, a lot more processes you have to put in place, because you can be kind of scrappy and get to 1 million. And we were.
yeah, yeah, you can. I mean, you can hustle your way to
Hustle.
it.
We did and hustle, but then you need actually like structures, processes, and different types of roles to get you
Yeah. So I
operational.
guess that it's funny that you say that because I was just going to ask you, having done this a few times, having gone through this cycle a few times, and I mean, look, the last, it's not a secret, the last 6 years have been really challenging economy, right? Like it's been
Mhm.
challenge and then it's been pretty good. And then money was cheap. And then, oh, wait a minute, the world stops and now it's starting again, but now money's really expensive. And like it's just a changing dynamic. And so through all of this, what structures do you think are critical to help support sustainable growth? Like what do you want to see from your investments, from your organizations now? What does that look like?
So what structures
Yeah.
we have in place? One thing we did implement a year, I read this over the holidays last year, is we implemented EOS, which is an operating
Mhm.
structure. A lot of founders read their book Traction. That helped me greatly get a lot more structure in my company. We started measuring ourselves like on a weekly basis instead of a monthly, having weekly scorecards across the organization, putting new org chart in place, how we looking at how we hire on our team and what kind of like values and roles we look for. So that structure has helped me definitely get our business to where we are this year, which is, growing at 60% year on year. When before we were flatlining, because we were
Mhm.
in that middle growth of like after you hit 1 million and you're trying to like figure out how to operationalize for what's next,
Yeah.
um, and getting through a downturn. So I think you absolutely have to have really be very structured from the bottom up.
Yeah.
And everyone understand, um, prices and costs and expenses. And then nowadays, I think we do have to ask ourselves, like, can we build something? Like, can AI do something for us? Or can we outsource something to another country to make it cheaper? Or is this like a more strategic role that we need to hire, you know, within our country or within the US usually? So, or closer to home, closer to
Yeah.
office. Or does this need to be someone that's sitting right next to me physically?
Yeah.
So
And I
those
think
are
that's a great
areas.
thing about having structure, right? You identify core processes, and core processes are the ones that are true to your company that you need to control. But to your point, AI has to be a part of those today. If they're not a part of them, we're going to be left behind by organizations that
Mhm.
are implementing core processes that
Yeah.
include AI.
Yeah,
And
because a lot of people are selling AI tools, but I was like, you need to use AI operationally. Like your business needs to be running on it.
yeah,
And that's the first thing we ask now too. If someone says like, we need to hire someone, we need this, we need that, it's like, can we use AI to build it? And can that do that task of that person? If not, is this a task we can outsource? Whether it's like, near shore, far shore, or
yeah,
locally.
that's great. So structures like business operating systems like Traction and that's what you're using. That's been helpful. Let me ask you also. You talk a lot, and I think it comes from experience and from savvy. Is there a sweet spot in your experience for this cash runway? You keep on talking about cash runway. So a lot of people talk about having somewhere between 3 to 6 months operating cash reserves as being the right spot for a growth organization. What do you think about that?
Ooh, 3 to 6 is tight. That's risky to me. I mean, we've definitely run like that before, but it's stressful because then you're constantly thinking about, if you only have 3 to 6 months, you are only thinking about your cash runway and every expense and dollar going in and out. You're having to watch very carefully. I think having 1 year is definitely more, it allows to gives you some room to breathe, to actually do some things that are strategic. You can't really invest anything, but you can only make like short-term decisions if you have 3 months in the
Oh no,
bank.
3 months is tight. I mean, you have to build to 6 months and then at
Yeah,
least. But
yeah,
so your goal is to
but
be
then
at.
also looking at when you're actually getting to cash flow, break even and positive like that. If you have that and you're aiming to that, and that's getting near, obviously, uh, you feel better. Definitely takes the stress down a lot. But that's the hardest thing to do, is to get
Yeah,
there.
yeah, absolutely, absolutely. So you like to aim for that 1 year, and you've learned that having a structure is really critical as part of that. Um, talk to me a little bit about how you deal with the fear part of it, right? I mean, your fear part of it as you go into this. I mean, it's nice to have the idea that yeah, it's not a bad thing, but on the other hand, it's a scary thing. So how did you manage the fear in the past, and how do you think about it moving forward?
Yep. I think I mean, like probably other entrepreneurs would say, this is what makes us kind of crazy, is sometimes that fear is actually just what's normal. Like you're used to that. You're used to that stress. And some of it, I think, is just figuring out like, hey, like you don't need to live in this like fear and stress all the time. Like, yes, we can, and it becomes, because again, it just becomes the norm to us to live and realize like, you can get, even just many people I've talked to, like you barely making payroll, and we just live on the edge like that so much, or making risks and not knowing what's going to happen, and and taking those risks a lot. I think, and a lot of times that stress and fear 100% is coming from cash, your cash
Totally
situation.
agree.
Fully, that's literally just what you think about, all the time. That's the fear, is just running out. And then, but you then also have to take those big, make some decision. You have to make decisions so quickly all the time. Of course, like you live in that fear, and you get used to it. But I think the idea, what I'm trying to do as a second, this is a second time venture, is you really have to get smarter. You really have to learn how to get leaner on all your expenses, and question yourself, and, ask your team, ask more people, get more advice from others that have done it before you on how you can like operationalize, a leaner staff, or try new methods and do things to get to cash flow positive. It's like, what are this, and like looking at like different scenarios, That's really your job.
Do you find that as you've become more experienced as an entrepreneur, as you've had more of the cycles, as you've, you know, had to subtract so that you can grow, as you've gone through your experience, do you realize, do you find yourself more structurally vigilant? What by that I mean, is it more regular that you're digging deeper into things? Because I think a lot of people balance their business at the beginning by looking at their bank account. And that's a really dangerous way of doing it, right?
Mhm.
But you have to really think about planning. You have to really think about structure, and you have to be looking at it constantly to make sure that you understand where things are going. So, is your dashboard something that you've really changed about how you look at things?
Yes. So mine is usually like setting, like the big, top line target and bottom line. So I'm looking at like my ARR, my next goal I'm trying to get to. So let's say it's like 3 million, and I'm looking at what profit I'm aiming to get to, and then every metric in between, and then setting that up for the next 6 months and seeing what exactly each team needs to hit in order to get there. So my main, yeah, what I do every month is I'm just like measuring actual to those.
Mhm.
But it's really hard at the beginning to do that because your CAC, you don't really understand, like your CAC is changing so much, your LTV is changing so much. Your marketing channels you're using, those costs, you have to try different things to see what works. So it's really hard to kind of even forecast as a small, I mean, you look at a forecast of a pre-seed or a small business, I mean, it's a joke, like you're just making up those numbers that you think look good.
Yeah.
Now I think it feels good when you get to a place where you actually like have some like real numbers that are getting more stable that
Mhm.
you can utilize to actually do that planning. And then, it's exciting for you and the teams in your business as you like continuously hit those numbers. Cause I think the hardest part, sometimes I was setting a number, but it was like too big or unrealistic and we weren't hitting it. And then that takes the team, you're like, oh, shoot, like what happened? Why didn't we hit it? And you don't really know. You're like,
Yeah.
these all
You
things
know, one of the
changed
things
and we
that
didn't know this was going to happen. So,
you said
um,
this really quickly. You talked about CAC and LTV, so lifetime value and customer acquisition costs. So, thinking about it, and you're right. Like most of the time when we're starting something, these are just numbers we put on a page. Maybe from experience with other businesses or not. Now that you've gone through the cycle a couple times, when do you know the numbers are getting closer to reality in a current entity? Like, is there a point that you know? Is there a data point? Is there something that you've observed that that gives you more confidence in those values than you had before?
again, I think you just see at least a few months like stability across those numbers. Cause at first, like your CAC is all over. Ours was like 1,000, then 200, then 500, this and that. It's like, and cause you're testing out different methods and channels, across the board. So you have to see at least a few months, I would say, like probably not even 3. I would say you would need a solid like 6 months of some stability across your metrics, to start to build. And also, I think definitely being above the 1 million mark. The 1 million mark, you're just testing everything. It's really hard to understand. I mean,
They
you can maybe
are.
get a baseline for some of your metrics, but those are going to change. Like your LTV is hopefully going to change. So if your LTV goes up, then you can start spending more on your acquisition channels, obviously. But and then you can start playing like, okay, what are my baseline numbers I'm trying to beat or try to get to?
Yeah.
But again, your business can change. You could sell a new product, that has a higher ACV or something. So then that creates a whole nother metric system that you have to build and account for.
Yeah.
And how many account managers are needed per accounts you have? Uh, what else does the business need to support this? You don't know until you do it. But I
Michelle,
think
it
once you get
really
that middle
strikes
of
me
like
that
1 to 3 million ARR, million a year, you start to be able to have some more stability.
yeah, it really strikes me that you're really into measuring the business. Have you always been that way, or was that through this learning?
Um, I think yeah, I think definitely this business, this venture more than my last. My last business was more about user growth, just user growth. So more about like user engagement, user metrics. I feel like this business, while that is still important, a lot of the metrics I focus more on are financial metrics.
That's
Because before it used to just be like grow your business at it doesn't matter at all costs. They didn't care about like investors and finance. They didn't care. They just wanted to see our top line, like how many users, how monthly active users, how engaged are they? And they invested with you. And that was your success too.
Yeah.
Nowadays it's really looking at like, what are your gross profit margins, your EBITDA, like what are, looking at more of the bottom line.
Shocking that profit matters, but
No.
it really, really does. Um, that's really cool. So
At an
what's
earlier stage, it matters more now, I think, than it used.
yes, absolutely. So let me ask you another question. Having gone through this now and really being focused on the numbers and really doing that, when you get blips, because you get in the 6 months of stability, you can see something go off the rails really quickly. How long do you wait before you hone in on that blip as not being a blip, but a change?
About 3 weeks.
About 3 weeks?
Yeah. So we have like weekly scorecards we'll look at. And
Yeah.
one week you can say, okay, some metrics we're down on it. Week two, okay, let's keep a lookout on it. If it's week three, then we start saying, okay, we need to dig into this and actually understand what's going on.
That's
You know,
pretty fast.
but yeah, but it used to be beforehand, I was looking at all of our metrics from a monthly perspective, and it's on us, it was too late.
Yeah, because if you wait 3 months, if you wait for three blips and you're waiting monthly, you're
Mhm.
3 months down the road instead of 3 weeks.
Yeah.
And in an AI world, especially, like everything is happening faster. So you've got to look at these things weekly.
Yeah.
Um, Michelle, I think we got to a place where, man, we could dig in for a long time, but I know our time is up. I want to respect your time, and I want to say thank you so much for sharing with us today.
Thank you. So happy to be here. Love listening to your podcast and learned a lot from other people. So excited to be here and hopefully share some good things with others.
Thank you so much.
All right. Thank you.